Hello, everybody. Welcome to Opening Call, live on TopstepTV. That's John Hoagland. I am Jack Pelzer, filling in for Eddie Horn, who's out sick today. However, I'm sure as hell going to check the odometer on my Ferrari when I get home tonight. Hoag, how are you doing today?
I'm doing good. Feeling a little bit better. It seems everybody's got a little something going on. My son is fine. He's just got some problems with his feet. They keeping him comfortable with some pain medication, and I'm helping him sleep. But he's still having a hard time getting around. But in a couple of days, I'm sure he'll be right as rain. Thank you for all of those who had been asking, I guess, yesterday. And looking forward to an interesting trading day today in the equities.
Mm-hmm.
We're going to go over the good, the bad, and the ugly.
Well, Hoag, you do have a version of the rally sweater on. I got the rally vest on because it's finance time, MFers. So what do you say we get to this with a little news?
Yeah, sure.
All right. Stocks are down. That's new.
Right.
ESN and Q are both off a touch overnight, but not exactly what you would call a huge sell-off. Hoag will get into what the ugly might be later. Bond yields are down slightly, 30 years around 4% on the dot. 10-year notes are below 4, and we're still inverted with the 2-year at 4.88%. Oil has come off its lows since last week as there's trouble in the Red Sea. I don't know if you've heard about that, Hoag.
Yep,
it is there. And lastly, as far as news, The Voice crowned a season 24 champion. It was someone that just goes by the name Huntley. So we'll see how that affects the markets later.
I used to watch that. I used to watch that all the time. It's 24 seasons now.
They must be doing like several a year because it hasn't been on since 1999, obviously.
I know, right? Man, that seems awful fast. But, when you get older, time seems to go a little faster.
Yeah.
Unbelievable.
Well, good luck to Huntley with his music career. I have no idea who that is. I don't watch The Voice. So what do you got for us, Hoags?
All right. Economic information. Just a reminder that tomorrow we have the third and final look at Q3 GDP tomorrow morning. And on Friday, probably the biggest number of the week is the PCE numbers. We know that the talking feds will be hawking that and looking for information on what they're going to do moving forward. I found it funny that Goolsbee was on Fox News last night. I didn't really get much of a chance to watch it, but I understand he did use the word that Alan Greenspan used many years ago, saying that the stock market was in an irrational exuberance. He used the word exuberance last night. Who knows if that's affecting the markets here today? But again, we're going to be checking out the good, the bad, the ugly. As far as today's economic numbers, the mortgage rates and applications came out. Rate now down below 7%. Last week, 7.07%. This week, 6.83%. Didn't help much for the applications, though. The previous week was 7.4% higher. We lost 1.5% in applications. Maybe that's got something to do with the upcoming holidays. Maybe. 8:30 this morning, the current account, which is a balance between valuation of goods going out of the country and goods coming into the country. Last one was a negative 2.16. Negative 216.8 billion. 216.8 billion going out, and this time it was negative 200.3 billion. Now, for some reason, that is now popping up as a more important number that's already out, so I don't see that there's any real major market reaction from that. But at 9 o'clock today, we are looking for consumer confidence or lack thereof, as well as existing home sales. Those are both, again, at 9 o'clock, and then 9:30, it's Wednesday, the EIA Petroleum Status Report due out. The last one was minus 2.3 million barrels, but the API had a slight, what was it? I'm just kind of looking here. API had a little bit of a boost in inventories here. It was under a million barrel boost. And then, well, we have Talking Fed Goolsby is due to speak at 11 o'clock again today, and at 12 o'clock there is a
He's
20-year
back.
auction
Did you say 20-year?
today.
Okay. Yeah, you mentioned the holiday home sales. I moved out of my old place around the holidays last year, and in the upper Midwest, 1 out of 10 experience. Would not try that again.
Oh, it always seems that it happens during a snowstorm if you're going to do that, right?
It indeed did last year. Thought I lost
Yikes.
my dog at first, and then he was hiding in our new basement in a closet.
Oh my goodness. Well, VIX is up a little bit this morning to 12.6%. The dollar 102.27, nothing major in the change there. And as Jack, you mentioned, the yield on the 10-year down still below 3.87%. Last I checked, tomorrow is the winter solstice. The sun will be directly over the Tropic of Capricorn. It'll be the shortest period of daylight in the northern hemisphere, longest day of daylight in the southern hemisphere. But that means that after tomorrow, the days will start getting longer again, and we'll be heading towards spring.
And season greetings to all the pagans out there.
Yes, sir.
All right. Well, with that, Hoag, what do you say we do it?
Yeah, let's get started here, as always, with the daily and the S&Ps. And our focus is 100% on context, seeking accurate context, always being good risk managers and remaining patient in our trading. So S&Ps, the good. Well, the upside auction is still intact. Look how low the volume has been. It is a holiday week, but we did add 9,400 in open interest. Still money coming into the long side at all-time highs here. Is that good? Open interest continued to increase on lower volume, but the price action was to the upside. We're going to see something here and I would say that that's good. That's good for longs, right? The structure, money still coming into the upside. The bad, take a look at the 30-minute chart. Now, this would be the bad for shorts, as if they haven't been experiencing enough bad for the last 6-7 weeks. We did leave the now new all-time high last night in the overnight session. Markets tend not to leave that. The regular trading hour traders, the longer time frame, seems to get an attitude when that happens, and they don't like the overnight to be a recent or all-time high. So that's the bad news for shorts. And again, as if they haven't had enough bad news lately. Well, the profiles, this is the ugly. We had a P-shaped profile, which would normally indicate short covering. Well, it's not supported by a loss in open interest. Buyers continue to come into this market. We have a late spike. Now, you guys hear me talk about the late spike, and it looks like right now that that we're going to be opening below the base of the late spike. That's the ugly for longs. So the base of the late spike, I saw Fred was talking about it in the chat here. I've got it at 48.17 quarter, 48.17 even. That's the base of that late spike. And here are the late spike rules. If the market opens in or above the base of the late spike, that's that 48.17 level, it's an indication of potential acceptance of higher pricing. You would look for price to continue moving higher. If price opens the following regular trading hour session below that level, it is marking rejection of higher pricing, possible acceptance of lower pricing. So we've got all kinds of shorts that have been getting munched all the way up. This market just eats shorts over and over, day over day, until it doesn't. We're going to be looking at the open here, and if we open below the base of that late spike, 48.17, maybe an indication that we are due either for a consolidation or a pullback. We're getting pretty close to the holiday. It's Wednesday. We know we've got important information due out tomorrow and Friday. What are traders going to do today?
Just for some extra context there, I believe the basket of the most shorted stocks in the S&P 500 was up something like 11% last week. Shorts are getting munched, as you said. And
Yes.
one more blanket disclaimer to trade carefully if you're going to trade this week, because when we say the volume's low, I mean, the daily volume in the ES, for instance, is what, Hogue? About half of what it was last week or very
Yeah.
close to it.
Yeah. I
And
mean,
that's with the completed roll.
yep. Yeah. I mean, this was switch day here, and volume was pretty good, and it's much lower now, and with everybody trading the March contract. So the volume is low, and I think what you're talking about, Jack, is low liquidity as well.
Yes.
Right?
Yeah. And remember what happened a few years ago on Christmas Eve or just before it when we sold off hard.
Yes. Yeah. Yes. It was an ugly day, and I wasn't trading. I didn't even realize it until it was pretty much over. And sometimes that can be a blessing. So what this profile and this late spike is telling us, and we've been kind of talking about the idea that anybody that is buying up here is a momentum trader. They are laggards. They're way late to the party here, and if those laggard longs decide to get out, that might be just enough to start a fire to start some longer time frame traders liquidating some of those tasty profit-filled longs.
Mm-hmm.
So that late spike at the end of the day yesterday kind of leaves me believing that the laggards, the late longs, are in. And when that happens, be careful. Be careful. Now we've got the NASDAQ with a similar situation. Here's the daily. The good upside structure remains. Even better, we settled above weekly kickoff high. Good for the longs, right? Upside, I mean, obviously, you can't say anything but that this is a trend higher. Volume was actually higher yesterday than the previous day. That's encouraging. We did add 3,500 in open interest. So it still says that the auction to the upside has some health in it. But my wonder is, are all of those late laggard longs going to get nervous early and start a fire that might take things a little bit lower, or just bring us into some sort of a balance? The market doesn't have to crash. It could fall into range bound activity, consolidation, chop, whatever you want to say, like it did here. And then we could see a continuation at some point into the future. So the upside auction is intact, low volume-ish, open interest higher than the previous day at the very least. What about the bad? Well, for shorts, again, we put in the all-time high in the overnight session. We don't know if the longer time frame traders are going to have enough of an attitude to take that out during the regular trading hour session. And again, we've got overnight inventory is short. We're not going to be opening with a gap, pretty centrally located in the range from yesterday, maybe even inside value. So be patient. The late spike that happens in this profile, again, that late spike is when you have a relatively range-bound day, and then right at the end of the day, range is extended and the market closes. It doesn't have time to show acceptance through volume, participation, or time at that level. So we look to where it opens the next regular trading hour session day. The base of this late spike, 17,012, 17,012, 17,012, right there. We're going to be opening below it. The basic rules for the late spike is, if that happens, there's a probability that the market will seek prices lower. It will accept prices lower. Everything is a probability. There's no guarantees of anything. Even if you don't participate today, it's an interesting day to watch, because you're going to be able to see maybe how this market responds to opening below the base of the late spike. So late spike rules: opening above a late spike higher, acceptance of higher pricing. Opening in a late spike higher, secondary but probable acceptance of higher pricing. But opening below the base of a late spike indicates potential rejection of higher pricing and acceptance of lower pricing. It's going to be just a fascinating study and auction process today, even if you don't participate. Take a look
Indeed.
at
Was there any news there? I know it wasn't a huge move, but I saw with those down candles this morning.
Well, it was the London Open is when that
Yeah.
happened. So, you can see some of the, especially I think in the S&Ps, it was pretty decent volume during the London Open. I mean, it's not really showing great here, but the London Open really did bring in some higher volume last night. So, gonna see. I don't see that there's any major news that did anything.
And with the kind of volume we have, you don't need a lot to start moving these things. There's a lot of rebalancing that goes on, a lot of people positioning for the end of the year. Yeah, it doesn't take a lot to move. So once again, be careful.
Yes, yeah, the lower liquidity with that volume, market's going to move a little faster and a little further.
Yes,
all right,
sir.
Here's the daily in crude oil. We got CLG 2024. Chart D is for daily. That's that watermark up there. So short time frame upside structure intact. We did close above the weekly kickoff higher. Volume was lower and we lost open interest, but that's a function of rollover. We lost 15,000 on the expiration in the January. We didn't really do much as far as open interest increase or loss in the February contract. The open interest came in the March contract. So we're kind of looking at an increase of 7,000 contracts overall if you take out the expiration of the January contract. So take a look at the 30. We upside short time frame upside structure intact. We now have an open above the range from yesterday, so we've created a gap. Gap rules will say that if we can't close this gap relatively early, we're going to be looking for opportunities for continuation to the upside. Don't forget that we do have the EIA petroleum status report here at 9 o'clock. Try and stay patient, even though we've opened out of balance and out of range. We have the information coming out at 9:30, which could change everything, or it could change nothing. Yesterday's profile was a P-shaped profile, which is not supported by the loss in open interest. We actually gained open interest in the February and the March contract. So buyers came in. We put in a semi-weak high up here. Whenever there's exacting highs and exacting lows, that tells me that these levels were attainable in several time frames and probably not likely to hold. Well, obviously that did not hold in the overnight. Opening with a gap, overnight inventory is long, so that could bring us, if we're looking for longs, potentially a better opportunity for a better trade location if the overnight longs get nervous and decide to get out. And that profile again, P-shape, but it was not supported. New longs came in above that important weekly kickoff level, 73.70. Be an interesting opportunity for us to see price get back down to that level for an execution. Gold. All right. We are right now inside a 4-day short time frame range. This market is seeking new data, and it may get that new data tomorrow and or Friday. All of these markets may get new data tomorrow and or Friday. So where are we? Well, I think we're pretty centrally located. There's always some opportunity in range bound markets, but I try and focus on the extremes of the current range, and those extremes I'm kind of putting at last week's high 2062.80 or 2063. Let's just call it that. These weekly kickoff levels remain from last week because they were tested but never failed. So the high of the current balance 2063, the low of the current balance 2033. It's a $30 range. And I would, if I were going to be trading gold today, if Eddie was here, I'd be suggesting that he trade range bound rules. Range bound rules, you get to one extreme, you fade it, you take the ride to the other side, and then you fade that. So 1, 2, 3, opportunities up here near 2060, 2061. That's last week's high right up here. We could rotate all the way to kind of last week's low, which is way down here. I'm thinking more like a more reasonable area down here, 2033. Now, we did see some demand down here. We saw that take price higher. We've seen in the overnight session here, or just for I guess this is regular trading hour. I've got it in my notes right here. This is a demand zone. This is where buyers came in and spiked the market higher. We've traded down to it. We did not really penetrate it. So now I'm looking for the market to come up to this area here, which is the high volume node. It's kind of a repair day. We talk about repair. This was a double distribution trend day. In other words, there was a distribution of time and volume here, access between that and the next area of volume and time up here. So we opened between them, found our demand level from yesterday. We've turned around and we're heading towards the potential supply zone up here. Again, I'm going to be patient. The market has opened kind of largely in range. I think we may have missed our opportunity at this demand zone down here. We'll let the market settle, look at the initial balance, and focus on those extremes for our opportunities today. Ladies and gentlemen, please make sure you take a deep breath before you get started. Always remain grateful, humble, creative, and centered in your trading. And don't forget, and pray for peace.
Pray for peace indeed. But real quick, we got a couple minutes here, before we go on, Hoag. So I just want to answer a question I saw really quick, or a comment. Someone was suggesting that maybe in this environment, the tilt is even more effective. I would say be careful with that, because remember, the tilt is based on the number of open positions that are here. And my strong guess is that this week there will be fewer open positions than usual. And the, how would you say it? The style of the people that do remain might be different in composition than usual. I think it's a specific kind of person that goes hard during this week before Christmas. So take that for what it's worth.
Excellent points, all, Jack. Excellent points. Yeah, there's probably a little bit of a different breed that's going to be trading, this week and next week. And I know everybody's looking forward to the new year and whole horizon of new opportunities. So take your time.
Yeah, well, sorry that I had to put that in there before to kind of pooch your last line there, but we can take another breath right now.
No, that's fine. No,
let's do it.
Always feels good, doesn't it?
It does.
Yeah. So a couple of people asking about my son again. He's okay. He's in a little bit of pain and not really walking around too much, but they said in a couple of days he'll be hopefully right as rain. Thank you very much for asking.
So once again, Ho put it right. Pray for peace. We got a great show today. Deanna is on Fast Markets. We got Hoop from the floor and from the chat. We'll be talking with Hoag. We have all sorts of guests coming later in the day. I'll be doing the quiz with Bonnie today. It's going to be great. So stick around. We're going to take a quick coffee break and be back right after this.
Ready for Fast Markets. All right. Welcome to Fast Markets Wednesday. We've got the usual suspects here. Good morning, Dee. Good morning, Andre. And last but not least, Michael. How you feeling this morning?
Morning.
Good morning.
I'm feeling great. Deanna, how are you feeling?
I feel all right. Yeah. I don't really like trading during the last couple of weeks of the year, so we're going to see how this goes. Might be quite interesting.
Oh, yeah.
Like Michael says, keep it light and tight.
Keep it
Light
like
and tight. Light and tight.
Yeah.
Yesterday I traded a bet, ended up 1,500, so I feel pretty good about that.
That's good.
Down
I had a bit of a
200.
weird day yesterday.
Yeah, did you make money?
Yeah. No,
No.
it was actually
Yeah.
a losing day. Yeah. So it was like, I had one crude oil up and it was like 2R, but somehow I didn't really, I don't know. I got a little bit. One of my dogs is not very well. He got bitten by a spider, and I was kind of fussing over him. So I just don't think I was really focused for the second part of the session. And then I kind of tried a couple of the trades, and I got the entry wrong, and I was like, oh God. So I got out of that. Tried another. It was one of those days, like just thank you next, kind of like Ariana Grande style, you know.
Just
like
30
done.
seconds to the open here, folks. Just over 30 seconds.
Morning, ICT. See you in there.
Yeah, ICT says you look a bit like Obi-Wan Kenobi.
Oh,
Yeah.
These are not the droids you're
Let's
looking
bring
for.
some of that. I think to everybody, let's bring that good positive energy and let's bring that trader mindset. And just remember, not trading is trading, and I'm not trying to be boring here, but not trading is trading. This is a week that always does some weird stuff. How about that?
yeah. All
So
right,
markets are opening right
Open.
now. Right
Yep.
now. We do not have
Ding,
any.
ding, 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 ding.
Ding, ding,
Not
ding.
already.
Ding ding ding.
Yeah, so we were just 70% on the tilt, and this big sell-off right here now put it at 50 or 63. So now they're coming back in a bit at 65%. I'm just watching that right now.
Okay.
You guys watch your things. What levels do we have up here? They should be posted at the top of the screen. Let's get that posted. And then here's your 70% again. We'll show one. We'll put a little one guy on.
What do you feel? Oh, I see it.
So,
I see what you see.
Setting up the opening range trade here. Dang it.
so
What
on
do you
NASDAQ VWAP, I've got the overnight VWAP that I've anchored to the open last night at 169.97.75. So that could be an area of interest for NQ.
What about for ES, Deanna, if you don't mind?
Yeah, same thing is just hitting up against it at 48.11.75. So it's not too far from it. So ES much closer to its own VWAP. VWAP. Whoop, whoop.
What do we got today for the calendar? Anything cooking today?
Well, I've got the inventories. Yay.
Yep. That's big.
Yeah, we've got at 9 o'clock consumer confidence
Okay.
and existing home sales.
All right. Nothing crazy.
Yeah,
No.
the home sales might be a little bit jumpy.
So I'm long now, but I'm keeping things light and tight.
You're long.
I'm long now. I'm short now. I'm long now. I'm short now. But it's light and tight.
I like it.
Yeah. So we have the 1705s, which is the old high value area. Man, it's not picking a direction. I'm out. Scratch.
Tilt
I
heavy
got
long.
silver.
Tilt heavy long on both equities.
Yeah.
Very long.
I mean, my crude oil is open with a gap up.
Okay.
Value area is just 66 ticks away. So it's not the biggest gap. But again, I looked at the volume on the CME site, and it's not. Usually we see around 160,000, 170,000. It's only like 77,000, which kind of worries me a bit.
Why?
It's because whatever moves you get,
Uh-huh.
they might suffer from low liquidity jumpiness. So you
Gotcha.
might get these like super quick pops that are almost impossible to catch unless you're already in a trade. And then if you are in a trade, it can just whip you out very quickly. This is the reason why I don't like trading during this time of the year.
Tricky.
And so we'll see. Sometimes this can also be a sign of responsive activity. So it's the other side, the other extreme, where you don't get many moves, and it's all just what I like to call a storm in a teacup.
Storm in a teacup.
Yeah.
That's where we were going.
Arthur, I did take the opening range trade. I'm long right
Okay.
now at 48.11.
So even when it opens inside value, you would still do the opening range trade?
Yeah, I mean, I've kind of committed to doing it every day to some degree.
Right.
Or another. So
Okay.
it's only a one lot,
Yeah,
but
that's right.
overall, it's been paying me. So
Yeah. This is not paying me.
I think actually, I mean, I would rather be short, but because of that late spike.
Mm.
But it's a small opening range. I mean, it's like 3 points, so it's almost
Yeah.
like not even. I had to take it. It's too cheap.
It's your
Yeah.
trade, John. It's your signature trade at this point.
Yeah. It's your jam.
It's your jam. It's right. Hoag's jam. Opening range.
Yes.
Folks jam.
A lot
I need
of
it.
folks
Yeah.
that wear cardigans they all have a jam.
Yeah.
I think
My
this thing feels
Obi-Wan
like
cardigan.
this feels like it's growing legs. It won't sell off.
Yes.
It won't sell off.
Give it time.
Really strong bias to the long side. Big